wanted to dig into the 4% rule. I really have been following your reports on this the past couple of years, and it fell to 3% and change. Now it's back up to 3.8%. Can we back it up and just talk about why this is a rule to begin with and how we should be approaching it today before we even get to the number?
Sure. This is one of the hardest problems in financial planning, figuring out how much you can safely take out of your portfolio in retirement. And the reason it's hard is because we don't know how long we'll live. We don't know how the market will perform, how stocks and bonds will perform over our time horizon. We don't know what inflation will be like. So it's very hard to know how much you can safely spend. So to help address that question, financial planner Bill Bengen, probably 20 some years ago, did some research where he was looking at the worst case scenario for retirees. If they hit the worst market environment in history, what would have been the most that they could have taken out as a starting withdrawal? And then inflation adjusted that dollar amount thereafter without running out of funds. And he hit on this 4% guideline, which we do think is kind of a useful heuristic when thinking about the adequacy of your retirement reserves. But in our research, we attempted to take a forward-looking view, incorporating where bond yields are currently, incorporating where stock prices are currently. And you mentioned, Jean, when we looked at this in 2021, we thought investors should take 4% down. If they're taking a starting withdrawal, that they should probably begin in the low 3% range. Thanks to a really bad market environment in 2022, which sent bond yields up and stock prices down, we actually think investors who are embarking on retirement today can safely take close to 4% if they want to have a 90% chance of their funds lasting over a 30-year time horizon.
There's a big difference between 3.3% and 4%. I mean, it doesn't sound like a lot when you're thinking in terms of single dollars, but when you're thinking in terms of a whole portfolio, it's pretty significant. If you're somebody who's entering into retirement, do you need to reevaluate what the initial withdrawal rate should be every year? Or do we think 4% was a rule for a really long time? 2022 may have been a little bit of an outlier. We can safely stick with closer to 4%.
It's a really important point. I do think investors should check up on their spending annually. A big factor in the mix is that retiree spending changes, just like it's the case in any other household where retirees may have higher spending years, where maybe they want to take the family on a cruise, or maybe they have big health care bills on the unhappy side of the ledger. So retirees should take a look at their spending annually. And ideally, if they can pay a little bit of attention to what's going on in the portfolio balance, that will help improve the portfolio's odds of lasting over a long time horizon. Because if you can, you should take a little bit less in a down market year when your portfolio has incurred losses. But the trade-off is if you're willing to be flexible, you can take a little bit more in those very good years. So we had a tremendous stretch from 2019 through 2021 where stocks performed really, really well. Retirees who were willing to be flexible during those periods could have given themselves a little bit of an adjustment upward to account for the fact that their portfolio performance was really good.